Today, we're going to go through an end-to-end process of what property sourcing is, from finding a property to analysing a property to looking at the different exit strategies of the property and the numbers that we are actually generating as well, so we can see everything from conception all the way to completion and income also. So without further ado, we have two property calculators that we're going to look at. We have the standard buy to let, and then we have buy, refurbish, refinance to service accommodation. So these are the two strategies that we're going to focus on for this property specifically. Just so we're starting from the same page, this was a client that came to us for our service of sourcing. We've charged $5,997. We charge this up front for the entire service. That is from sourcing the property to working with the client for our network. So we introduce them to broker, we introduce them to solicitors. We then, once they've got the property, help them with the entire refurb. So this property actually required a medium to large refurb, which we charge a project management fee on as well. And now we manage this as a service accommodation property as well. So that is where we put the property on Airbnb, booking.com and other websites online, and we charge by the night to create a higher income than what a standard AST would be. But we're going to look at both exit strategies. Cool. This was the property. So this property had been online for a while. We were looking in and around Wigan, due to contractors in the area, due to it being just outside of Manchester, and Manchester is developing. The smaller areas just outside becoming closer to Manchester are easier to access Manchester. So in terms of where we want to be looking, Wigan is an area that we quite like. We have about 3 or 4 that we've done now, but let's look through this one specifically. So this is a 3-bed semi-detached property. These are pictures of said property. So this is one that we saw online, we called up. It'd been online for a few months. So when it's online for quite a while, for us, that means there's opportunity to negotiate. When it comes to sourcing, when it comes to our service, when it comes to buy, refurbish, refinance in general, for me, the biggest creation of value is buying with equity within the property. So this was advertised at £130,000 or £129,950. So if we can purchase this property for less than that, we are creating equity from day one, whether it needs a refurb or not. So that was the focus on this. And because it had been online for a few months, it gave us that opportunity to be able to negotiate further on the price. As you can see, the property needs a refurb, quite a substantial one. So there was the second way of adding value. So the first way for me is negotiating well, buying well. You make money when you buy, which is a common saying. The second way is adding value through a refurb. So we looked at this property. It was online, as we said, at the £129,950. As you can see from the picture, it had some cracking. It was a property that needed absolutely everything done. Outside, the inside, absolutely everything. So it was online. We called up. One thing we always do is before we view any property is we will always have the conversation of where we need to be. So we called up this agent and said, right, it's currently online at the 130. We're not near that. We're probably anywhere between 110 to 115. Would that be accepted? They came back and said, right, we'd consider it because the seller on this, obviously it's costing money every month. It's been online for a while. They want rid. So once we got that confirmation, we went to view. As we said, so purchase price 115 was the maximum we wanted to be at. We then wanted to understand, right, what is the property worth? So I've done this, which are new properties. So back when we purchased it back in, I believe it completed in February, we got the offer accepted around November, December time, so 12 months ago. What we need to do is we need to understand, right, what is the value of this property? So if we look at it, it is a 3-bed semi-detached in this postcode. What I've done here is I've put the postcode in, searched within a quarter of a mile, 2-bed to 3-bed, just to really understand the area. Property type, either a semi or terrace. Again, I want to look at comparables, what terraces are selling for, really understand the area better. And then I've included sold STC as well, or under offer, because better comparables are ones that have sold. So if we just have a little bit of a scroll down, what we want to be aiming for, what we want to be focusing on, are properties that are comparable. So if we look at this one, this has got a huge drive. It's got a dormer. You can see it's been, they've gone upwards. So it looks like a converted bungalow. And it's in very, very good condition, with everything done up to quite a high level. But it's got that big driveway. So for me, I'd be looking at that and going, right, it's not really a similar comparable. I assume as well, just from looking at it, the size, so this is 665 square foot. This property, if we click on it, if it says this is 104, so it's substantially bigger, although this is a 2-bed, interestingly. So what we want to do is, I wouldn't be using it as a comparable. So I'd have a quick scroll down. Again, I'm just going to fly through just to find some comparables. So again, this doesn't have a drive. Let's have a look at this one. So this needs a bit of work. It's got a drive and a garage. So I would probably skip past that as well. Right, this looks like a good comparable. Needs a little bit of work inside, I would say. 3 bedrooms, semi-detached, 0.14 miles away. So that is 170, and it's not even in the best condition. It's slightly bigger, a couple of 100 square foot bigger, as you can see. Let me just put this next to it. The upstairs looks pretty similar. Yes, the downstairs it's a little bit more open. And it's got the garage. I assume the garage is why it's quite a bit bigger, whereas this does have a garage, but it's outside. So for me, that would be a very good comparable for 170. So you can see a substantial increase on that. What we're looking for is the GDV once we've finished doing the work. So if we look at another one, this has got a drive, but it's around 160. Looks very nice inside. Let's have a quick look at the size. Exactly same size. I think this is a really, really good comparable. So it's within a quarter of a mile. If we have a look at the floor plans, it's very identical. It's just got a bit of a drive. So for me, we've got a couple here that I quite like. We've got a 170, a 160. If we have a look, right, we've got a 2-bed terrace at 145, a 3-bed terrace at 145, which is again quite a good comparable. So we're expecting a little bit more. I would be saying anywhere from a GDV of 150 to 160. If we do a good job of this, I'd be happy to kind of put a 160 on. So if we look at this market value of 160, rental income, let's have a very quick fly through on rentals. If we go back on Rightmove to rent, property type, house, number of bedrooms, let's go 3, 2 again, and include let, agreed. So let's have a quick look at this then. Within a quarter of a mile, there are nothing online. Within half a mile, here we go. So 3-bed semi with a drive at 900. 3-bed semi here at 850, no drive, done up ish. 2-bed terrace, 3-bed terrace at 700, looks very small. Probably not a good comparison. So if we're actually looking at 3-bed semis, we've got an 850 and a 900. So this is a drive. I'd be going, great, 850 is again a very good comparison. 850 refurb. I'm not going to go into this too much because this is probably a completely separate video, but a refurb on this, I will quickly tell you what we would do, but a refurb on this, bear in mind this is up north. So if anyone's watching this down south saying you cannot do a refurb for this, down south I agree. However, we are not. We're in Wigan. We are up north. So for this, I'd be going electrics, new kitchen, new bathroom, painting and decorating throughout. I'd be going new flooring. I believe from memory, the windows are okay. The heating system was okay. So we didn't need to replace. I think a couple of rooms needed plastering in the end as well. Then we've got joinery, internal doors on the outside tidy up. We also need to, well, actually, we'll get onto that in a second. So the refurb on this would be, I think, came in at about 21,600, including that. So that would be about, let's put 19 in. About 19. Cool. Okay, so this, as a buy-to-let, is what we were looking at, give or take. I believe the interest rate came in at about 5 with a 2% arrangement fee. Yeah. So, as a buy-to-let, 115 purchase is what we're aiming for, 19k refurb, or 22,800 including the VAT. Here are the cost summaries. So the deposit, which is 25% down, is 28,750. Buying costs, which include solicitors, an ILA because the person was buying in a company name, broker and survey, and then the sourcing fee came in at 8,397. Stamp duty was 5,750. although I believe this might have been just before, so it was less. However, leave it at 5,750 for now, because let's say we're buying it today. And then refurb 22,800. So the yield is 8.87%. The total cash needed 66, and the equity is 72. However, we didn't buy it at 115. So when we viewed the property at the 115, we came back and said, right, we love it. However, the refurb's bigger than expected. We're probably coming in anywhere around the sort of 105. Don't want to waste everyone's time, blah, blah, blah. We negotiated. We eventually got the 105 accepted, waited a few weeks, and that got accepted, which makes the numbers even bigger, even better. So we've got fantastic yield, but that's worked out on the purchase price. The total cash outlay was just under 63,000, and then the equity was, or is, just under 80 as well. The goal for this, if we were to do a buy-to-let, would be to purchase, rent it out for a while, and then we would probably look to refinance this property to pull some money out. However, we didn't do a buy-to-let in the end. We ended up doing a buy, refurbish, refinance, service accommodation. So if we input the similar numbers, 105 purchase, market value is still 160. The rental income we'll get to in a second, because what we would do is we'd put it on the Airbnb market. So we'll see if we can find numbers for that soon. And then we've got the refurb, which was, if we look at the other calculator, including VAT, was 22,800, and then it was roughly about £5,000 to furnish it, stage it, etc. So we were about 27.5. Cool. And these numbers were about right, I believe. Yeah, the only difference was at 650. So let's move on. So yeah, total cash needed 67. So it's the only difference between total cash needed on this strategy compared to the other one is £5,000, because that is for the furniture, the staging equipment. This is to get it live on Airbnb, so photos, etc. Now, what I want to do is I want to show you the finished product. Okay, so we bought the property at 105, we refurbed it as we said, and then we decided this was the best strategy with the client. So actually, we felt as if we had a higher income, a higher return by doing this. I'm going to, rather than kind of look through the Airbnb numbers and etc., I'm going to show you the spreadsheet that we used after we looked at the numbers. So we found that the base rate, the average rate was around £110 a night. The cleaning fee is £85 per clean. The average as a company, so we own the management company for this, so we knew the numbers quite well before. Our average nights per stay, average nights per stay is 5.5, so we can use that number because that is as a company what we use. And then occupancy, our average occupancy is around 75%. It's slightly higher, but 75% nonetheless. So after this spits out all the numbers, if we didn't have any direct bookings, the payout per month is roughly 15. So that's what this client would get. So if we click back onto here, so that actually includes that number and that number. So if we were to put on here rental income, already forgotten, 15. Yeah, the net rental on this is quite a bit higher. We've put £400 insurance and bills. I think it's slightly less than that for a 3-bed semi-detached, but we'll keep it conservative nonetheless. So the net rental, this client's anticipating to take 557 as kind of an average month. To put bluntly, we're a little bit higher on direct bookings. We're hitting around 40% as an average, which then this goes up £170 or that is. So that would increase it. But what we like to do with all our clients is we like to be conservative. What I don't want to do is overpromise and underdeliver. So we focus on this is where we anticipate, and if we can ensure we do a good job throughout, it just means that we're ticking more boxes. Cool. So refurb and furnishing, £27,500. Let's just quickly go through the pictures again. So as you can see, it needs absolutely everything. Fly through them. This is the property that's online. Okay. So as you can see, that 27.5 included everything. I mean, we've used a professional photographer as well for the photos, so they look even nicer. But it included, I mean, everything you see in here is what that 27.5 includes. So I'll just quickly go through it. So we've got the living room obviously finished, new kitchen, as we said, the staging. So it included coffee machine. Well, I'm not going to list out what every photo bloody says, but as you can see, it includes everything. This client actually wanted a TV in the master room as well. So we're more happy to again work around that. So we put a TV in that room as well, and then we've got a single bed in the small bedroom because it was a relatively small. So yeah, this was the finished. One thing that we offer our clients is the opportunity to work with us through the staging and furnishing and refurb. So this client, for example, wanted to put certain things or certain aspects into the bathroom, for example. So the wallpaper, the flooring, I think they even sourced a couple of items themselves. That is something that they asked to get involved in, and this was a finished product. So if you don't like it, you can blame them, not us. We even did the outside, as we said. So yeah, that was absolutely everything that it included. The only thing that it wasn't was windows, but it did include doors and a Ring doorbell, and I believe it's got a minute device as well. And then we also put some lock boxes, which is part of the process for the management. Cool. Okay, so as you can see, good finish in the end. So what we've done is we've purchased the property. If we just rewind slightly, purchased property for £105,000. We've spent £27,500 on the property. We've increased the value from two ways. The first way, we bought it at a very good price. So we negotiated well. And the second way was through the refurb and furnishing and staging and etc. Cool. So this is now online. And this has been generating, as we said, around 15. The numbers we've actually been hitting are, we've averaged around between £1,600 and £1,800 a month. So if we actually put 1,700 in, the return increases quite a lot. However, let's keep it at what we expect. The return on these type of properties that we aim for is around 20%, dependent on area, dependent on client. So for example, we're looking at one in Salford, which is a little bit more higher in the value. For that, I think the return's coming in around 18.5. And then also we've looked at one, for example, in Crewe. So a couple in Crewe that we've looked at are 4 beds that we're going to be positioning onto more of a contractor market. The returns are hitting around sort of 28, 29% for them. So the aim is around 20, but we're seeing numbers even higher, and that's on income alone. So this one, for example, we're spending 67 to get it up to the standard. We're then going to refinance, which should bring in around £41,000 back to the client. So the overall money that this property costs is £26,000. So that is the money left in the deal. They'll have they'll have £40,000 in equity, which is 25% of the 160 because the mortgage is at 75% of that. And then after all of their costs, which is mortgage, insurance and bills, the fees, which I know aren't stated on there, but the fees, and then the rental income, is around 557 on this deal, which means that they should be clearing close to £7,000 annual income a year. So to spend, or to have the money left in, so to spend 26,000 and be making just under £7,000 a year is 25% return. Again, all these numbers are the north. So we look at areas that are the northwest and Yorkshire. There are 2 focus points. If anyone's wanting to do this as a process, so they want to source properties, they want to be charging 5,997 or whatever they value their service at, the first thing you need to do is find your location. So when we first started, we looked in and around the Yorkshire area, but as we've progressed and as we've grown as a team and as a company, now we've got the contacts and resources to be able to do projects like this over in the northwest as well. But one thing that you need to focus on is your area. So you need to, a saying that I really like is inch wide, mile deep, which basically means that you find your area and you become an expert of that area. Okay, so if, for example, I know a couple of the guys that I'm training at the moment, one is based down in Bristol. So I want that person to know Bristol so well, to know all the agents so well, to have contractors so that they can project manage. So if anyone wants to buy in Bristol, they approach that person because that is their patch. Whether it's for expert knowledge, whether it's to manage anything, whatever that might be, that's what their focus is. And mine has been Yorkshire, and now it's moving a little bit over to Northwest as well, again, because we've grown. Cool. So that, I believe, is that. Just to kind of quickly reiterate, we've looked at this as a buy-to-let. The numbers still work, although not as attractive. The net return is 7%, although again, we would refinance this at a higher value to bring some cash back in. So the return then does grow on a BRR. And then to put it onto service accommodation, after refinance, we're looking at around 25% return. And as I sort of said, this was the finished product. So I'm going to look at doing a few more videos like this where we break down either properties that we've done or break down properties that we're going to do. If there's anything specific that you want from me, please let me know. Whether that's, can you focus a bit more on finding the right location? Maybe that's, can you focus on, right, how do you come to that price on a refurb? Whatever that might be. Or even if it's investor focus, raising funds for projects like this so you can do it yourself, whatever that might be, please do let me know. So yeah, whether you're looking as a sourcer to build this into your business, to offer it as a service, or whether you're an investor that looks at this to go, I'd love to do this, but I don't have the time, I don't know how, and I need help. We do this, as I say, as an end-to-end service in a couple of different areas. And if you want to learn a lot more like this, different ways of analysing, a bit more in-depth, a bit more kind of honest and pulling away the curtain. If you're just curious and enjoying this sort of content, make sure you give us a follow, because we're looking to put a lot more of this out there to help others get involved in the property world.